Good morning. Today is Thursday, November the 17th. The time right now in Singapore is 8:22 in the morning. Overnight, Wall Street was very, very quiet despite the release of a major statistics in the form of retail sales. Retail sales was a lot more robust than the market was expecting. Basically, the market was expecting a growth of 1%. But the number that came out was actually 1.3%. And when you compare that to the previous month of September, it was zero growth. So 1.3% means that US consumer still is out there spending, and that is actually going in contrast to the market expectation. And remember earlier on, just a few days back, last week, we had actually seen the inflation situation actually starting to come off. We have seen CPI coming off, the core CPI numbers have actually come off. And we also seen the most recently this week, we see the PPI numbers also come off quite a fair bit. Now that gives the a scenario in which market participants are now expecting the Federal Reserve to actually go easy on the December rate hike. Okay, so much so that there are Fed officials now are coming out and say that they are quite comfortable with a 0.5% increase in interest rate come December. But the last night's release of the retail sales number now complicate matters because it shows that demand has not been destroyed. Retail sale is still robust, and that makes the expectation of a December 0.5 rate hike now be a lot more complicated. So it does muddle the water a little bit. So the market doesn't know which way to go. So the best thing to do is take profit. So yesterday night, this is what we saw over on Wall Street itself. Dow Jones actually comes back down. It did not challenge the overnight high of 33,987. And the market come up, and going forward into today's trading, I think the market may actually extend a bit lower because there is no more major numbers to be expected for the rest of the week. So there is no more impetus unless something else happen in other areas. For example, yesterday we have reports that 2 missiles actually landed up in Poland, and initially Zelensky, the president of Ukraine, claimed that the world must come in and now start to take out Russia because they have attacked a member of NATO, and under Article 5 of NATO, it means that attack on one is an attack on all, and NATO must respond. And it turns out after investigation, the missiles were not fired by Russia. Okay, it was it was Ukrainian missile that was fired in response to the hundreds of missiles that was raining down on Ukraine. So for some reasons, 2 of Ukraine counter fire end up in Poland and killed 2 persons. Okay, so it's a very dangerous situation because anytime if NATO feel that they have been attacked deliberately by Russia, then of course all hell will break loose. So fortunately for now, they have decided this is not the case, and even the US come out and say that it is a isolated incident and it's definitely not fired from Russia. Okay, although Zelensky still insists that those are not Ukrainian missiles. So unless we have another situation from another space, not necessarily in the economic space, then of course going forward, I think there's a good chance for US equity to pull back a little bit deeper going for the rest of this week, today and tomorrow. Okay, so over in the S&P 500, we also saw the same thing. The market did not challenge Tuesday high of 4,028.8, and the market has been tracing back, and there's a very good chance the market may actually come back to test the 3,900 levels. And if that's the case, I think there is another chance for a buying opportunity for the market to extend higher, because I do feel that this rally from 3,491 does not look complete, and it does looks like it's missing 1 leg higher. So there is still the possibility of another 1 more leg higher beyond 4,028, okay, going forward into next week. Nasdaq has come off also. The high traded on Tuesday was 12,024.95, and you can see yesterday the market pulls back a little bit deeper than the other 2 equity index. And midterm, I think this market may come back a little bit, and we still want to see the pullback. I have already shorted the Nasdaq going to yesterday's trading, so I'm holding on to my short position, hoping that it will come back a little bit. I'm also placed a buy order in the S&P 500 near the 3009 levels, and I hope that the market can actually give me that pullback for me to at least take some profit on my Nasdaq 100 position, and then to go long on the S&P 500 near the 3009 levels, and for another push higher. Okay, for the time being, I'm going to leave the Dow Jones alone for a while. So this is my my idea going forward. Over in Asia itself, we can see that let me see whether Hong Kong is open. Hong Kong is not open yet. And of course, overnight, we can see that the Hong Kong market actually went up to a high of 18,414, and the market has pulled back a little bit. So based on the week opening, week closing on Wall Street, there's every possibility the Hang Seng market may actually pull back. Moreover, it has already hit my target. This is a three-way, very neat rally and equality move to slightly beyond my ideal target of 18,170 or 169. So the market went up to 18,414, which is more than what I expected. So we can see the market have already hit its target, and if the market does pull back, I will not be surprised at all. So going forward, everything depends on what happened on Wall Street. If my view is that there's going to be one more rally higher, then perhaps this pullback could be a buying opportunity for those who still looking to do something on the Hang Seng Index. Okay, Shanghai Composite right now has not opened yet. The high traded was 3,145.62, and this move here does not look complete. Looks like it may extend higher to 3,226 at the bare minimum. So I think this is still good for another rally. Okay, over in the Nikkei, we can see the Nikkei actually this morning has pulled back a little bit, and this is to be expected. I think the market may pull back a little bit, and to test this near-term support line. If it's broken, I think the equality move will be at 27,482 to 27,323. So this is a bracket of buying opportunity if there's going to be any chance for the market to go higher. Basically, the market has already hit my target. This is a neat three-wave rally. Okay, although it went up more than what I expected. The ideal target was 28,000. It went up to 28,329. Okay, so by and large, I think I do expect a pullback. Okay, but basically, I think this is basically perhaps a buying opportunity if we extrapolate from the expected one more leg higher in the on Wall Street. Okay, over in the currency market, we can see that the dollar has been flatlining. Yesterday, there has been hardly any movement in the dollar yen situation. Market has gone flatlining, just around the 139.5 levels. So there is nothing here we can see. Although the market has traded a low of 137.66 earlier on, I was actually selling dollar yen, and I did not take profit at 137.67, and the market went back up to actually stop me out at a break-even point, and now I'm looking for a chance to buy at much lower level. And before that, I think if the market ever rally up to 141, that will be my call to actually take up a short position for another leg down. So I actually have my limit order to sell at around 141 level. So I'm hoping that there will be one more push higher for me to do that. Okay. Over in sterling, also flatlining. The market high traded this week was on Tuesday at 1.2029, and the market has been flatlining. So there is that possibility market may pull back a little bit before it rally, because if the dollar is expected to continue to weaken, because based on dollar yen, I do expect dollar yen to go down to 132, then obviously this market is all the other currency may rise as a result. So yeah, this is a market that still has potential. Over in the daily time frame, I have always been mentioning that my target is at 120.60 to 123.70. So although it came very, very close, but it did not quite make it into my ideal target range. So ideally, the market will have a one more leg higher, ideally come to 122. This is my projected target. 122 will be my hard target, and if the market can go to 122, I'll be looking for opportunity to sell. Okay. Over in the euro dollar, this is a three-wave move. There's now possibility a move downwards to 101.87, and then if that's the case, maybe there's one more leg higher to challenge the May high, which I seriously doubt will be able to be overcome. So this is over a longer period of time. I think we are still looking to sell the currencies buying the dollar. Over in the crude oil market actually came off last night. Okay, let's look at the 1 hour time frame. We can see the market has been drifting. but basically drifting lower. Okay, ever since the market hit a high of $93.74 on last Tuesday, the market has been going lower and lower. So I have already short uh, crude oil at above $89. I'm hoping the market can come down to $82 for me to square my buy back my position and then look for opportunity to buy on the way up, because over the longer period of time I do expect prices of energy to continue to track higher. So this is a short-term play. This position has been around for what, almost a week now. So let's see whether the market can go down to $82. It does look good though. Okay, over in gold basically has been holding the line. As the dollar corrects, it gives the precious metal market basically the chance to actually rally, and the market has gone up to a high of 1,786.5, and he has been going flat since. There's a chance the market may pull back a little bit, maybe to 1,746. Again, that would be the ideal level for me to reach, to actually buy some more, because I think this market is going to gun for $1,800. So if the market does pull back to 1,745, 46 levels, I think that will be a great level to actually consider picking up some more long positions. I basically has my long position still very much intact. I have been long gold market since October the 7th, and this week, at the beginning of this week, I actually took some profit, and I leave my some call position open, hoping for extended rally to $1,800. Currently, I do not have any position on silver. Silver basically now is flat lining after trading a high of $22.25, and the market now is pulling back. There's a possibility it may come back to test the $21. Currently, like I say, I have no silver position, and I hope to have some, but it got to be at some reasonable price that I can afford. And currently, anything that's above $21 does not look attractive to me. So I'm hoping for lower prices if I get a chance. Okay. Over in the crypto space, nothing really much happened. This is the 1 hour time frame. You can see that nothing has happened over the last 48 hours. Market is pretty flat right now. Currently market is at $16,600 level. It is basically going nowhere. After the fiasco of the FTX blow up, all players has been hurt in one way or another, and luckily my account with FTX actually was withdrawn just 24 hours before it got into serious trouble. So thank God I saw the sign, and I actually closed my account with them, and I have managed to take back my deposit. So thank God. Okay, so the other crypto coins have basically also been flatlining. But because the market has been so severely compromised by the blow up of FTX, right now we are seeing on an almost everyday basis more and more players are coming forward and say they are caught in the fiasco, and they are filing for bankruptcy, or they're going to stop withdrawal. So you can see that more and more players are now coming forward and say that they are also in big trouble. And we are based on this general negative climate, I think it's quite natural for the crypto prices to continue to be under pressure. And I will not be surprised if Bitcoin goes much lower than where it is right now, and that applies for all the other coins. Crypto Ripple now seems to be having a little bit of a win, because there are rumors in the market that instead of, earlier on I did mention that something is cooking between Binance and Twitter. Okay, Binance actually invested in Twitter, or how should I say it? Binance actually came up with $500 million to support Elon Musk to take over Twitter, and it looks like Elon Musk may be working something with Binance to launch an ecosystem very similar to what we call a WeChat version of an ecosystem. And one of the payment coins that was originally rumored to be favored was Dogecoin, but I think the market for Dogecoin is actually very small. It's not very efficient, and I think the latest rumor is that maybe Elon Musk is going to use Ripple, okay, Ripple to actually be the token used for payment for the Twitter services. So that actually may give the Twitter, may give XRP itself some form of endorsement. Okay, although we have yet to hear from the SEC as to how far the lawsuit between SEC and Ripple Lab is going to be unfolding. Okay, so we will have to watch the development in this space here. Binance Coin has gone into hibernation as well after a majestic rise to $400. Now it's coming back down, and it looks like now it is flatlining. Dogecoin obviously have no movement whatsoever. It's a meme coin. There is no real utility behind this token, so the market is basically flatlining, and this applies across the entire crypto space. Market is just holding water, hoping that the market do not have one more sell wave, which I think is going to come. Okay, it's almost inevitable. Almost inevitable. When we keep on hearing on a daily basis, new players are still coming forward to claim that they have been caught in this entanglement with FTX. So there you have it. For the time being, this is all I have, and I will get back to you again tomorrow. Bye bye.